in Kenya, informal employment accounts for, I think, 75% of total employment in Kenya. So the KRA needs to broaden the tax base. They've tried to introduce presumptive tax in a bid to capture that segment of the economy, but it does contribute to why the tax to GDP ratio is lagging GDP growth. We've also seen, to your second point, in terms of how fiscal consolidation, I think the challenge has clearly been devolution. One thing that we had not anticipated, like I said, allocations to county governments, 1.3 billion over the last 5 years. So that has tested the fiscal deficit. I think it's a price we are willing to pay because, 1.3 trillion shillings, county allocations over the last 5 years. So that was something that was not anticipated earlier, and I think that has also made the government not be able to meet its fiscal deficit. In terms of how you do fiscal consolidation and still achieve growth, like we said before, consolidation should be focused on recurrent expenditure rather than development expenditure. And that there appears to be significant opportunities for consolidation in terms of recurrent expenditure. So that's how you create a win-win situation. You do fiscal consolidation, but primarily on the recurrent expenditure side.
Another thing that the government can do is make sure that the absorption levels of our expenditure in the development side is high, and I think there is a concerted effort that we are seeing, and that's why we have a Minister of Ministers who I think he was put there so that they can actually fast track the government projects and achieve more, because for as long as projects are being started and they're not seeing the light of day, but some money has been spent, then we are losing out. But if we can start projects and see the end of it, if yesterday anybody listened to Matiang, he gave an address, I think, on one of the media stations. He was very clear that the reason they have that committee headed by him is basically to make sure that projects are getting implemented on time, on budget, and therefore more is being achieved or is permeating back to the economy. Otherwise, we end up with doing a lot and little is being felt by the common man.
Regarding the rebasing of GDP, it will lower the tax revenue to GDP ratio. But like we said, if you want to remain above the minimum threshold of 15%, we need to do three things. We need to win the war on corruption, we need to broaden the tax base, and we also need to broaden the tax base and limit exemptions. There are still some exemptions, VAT exemptions, that are unnecessary. So those three steps need to be taken in order for Kenya to remain above the minimum tax revenue to GDP threshold.
I think about the pension scheme. I know for a number of years, a key concern was about the fact that it would be the first time that civil servants will have salary deductions to fund because it would be the government would, the employer would pay a portion and the civil servants would also pay a portion. And I think from an employee perspective, that was a big issue. I think it also involved the unions, and there was a lot of debate between, a lot of back and forth with government. To my mind, I think that has possibly been resolved. I'm not very sure whether that's been concluded. But what I also know is that the structure has already been set up in terms of having a board of trustees, and a chairman was even appointed. I don't know whether other trustees were appointed, but I know there's a chairman. The former CEO of the RBA was appointed as a chairman of the board of trustees. But I haven't had much more beyond that. So I think it's something that, as I said earlier, should be fast-tracked because it will address a key expenditure item for the government.
What we've seen in the Kenyan economy over the last decade is that it's diversified a lot. So what you find that even in years of drought, like 2017, the GDP growth actually surprised a lot of external observers, coming in at 5%. So yes, while agriculture is still the biggest department, the biggest sector of the economy, we find that sectors like information and communication, accommodation and restaurants, trade and transport have increasingly been taking a bigger share of the economy over the years. So if the rains were to fail, then we would see GDP growth slow down from the expected 5.7% to maybe around 5.3, 5.2%. So the thing is, our economy remains resilient and has diversified quite a bit over the last 5 years. So we'd expect some deceleration, but still GDP growth would remain above 5%.
Let me also add a perspective about the rains, because previously in our history, failed rains have always also been associated with energy power cuts. But I think what has also happened over time is that we've also diversified our energy sources. And that is why right now, even as we are dealing with the challenges of rain, you haven't heard anything about power rationing, by the Kenya Power or KenGen. And that is because our sources of power have become more diversified, especially geothermal contribution to the energy sources. So I think that is also a positive development in terms of how we've also grown and developed as an economy.
I always say headline numbers look good, but what worries me is that we are still an agricultural dependent country, and most of our agriculture is subsistence, and most of us depend on agriculture. So as much as headline numbers will still be decent, like Jad has said, we are very diversified. In this town, we'll still feel okay. But the mwananchi down, who actually depends on agriculture, and that brings a debate of inequality in terms of income inequality, there will still be a negative impact in that sense. So we will not be out of the woods, if you ask me, in that sense, because of just the way who bakes the cake, who bakes the bigger cake, and who benefits. And also, we are still a very rural-based economy, in a sense. So that then becomes a bit of an issue to the masses. But in terms of headline numbers, the structure of our economy has improved quite dramatically. And the good thing, we don't rely on commodities so much, including soft commodities, as much as other countries do. And that does help. Even when you see Kenya going through a political crisis, most of the time we are much more resilient. When the world goes through a bad patch, we are much more resilient. But for me, drought worries me much more than any crisis, to be honest, just because of the masses that actually rely on agriculture for survival and subsistence and incomes.
One of the 4 pillars of the Big Four agenda is manufacturing. And we've seen a positive development in terms of crackdown on illicit goods and illicit trade. We've seen the Kenya Association of Manufacturers actually mention that as a positive step, including brewing companies and also cigarette companies. So that will provide a boost to the manufacturing sector, the crackdown on illicit manufacture. And then also the reduction in the cost of power in terms of diversifying the sources of energy, as Einstein said. So those have been 2 positive steps for the manufacturing sector for the Big Four agenda to be achieved. And then on the affordable housing side, and also overall on the Big Four agenda, the government really needs to stimulate private sector participation. That's the only way to ensure that the Big Four agenda is achieved. So there is need to stimulate private sector investment. And once again, we think there is need to repeal or modify the rate cap just to increase the level of private sector investment that will enable realization of the Big Four agenda. It has to be a public-private collaboration.